2 to 3% on the back of product diversification that they're looking at and increasing their market share specifically in two segments, which is the SUV space, which is growing very fast, as well as the electric vehicle share. So the only integrated pure play manufacturing unit for air conditioners for passenger vehicles and commercial vehicles. So the street definitely likes that. Let's see how the stock does today. But the market is all set to open in less than a couple of seconds from now. Looks like it's going to be a decent opening, not as great as what the Gift Nifty suggested, but either way, I think Infosys will be a bit of a drag on the market. Also, a couple of these OMCs like BPCL in focus. But on the upside, you'd have to say plenty of stocks, Fed, FINA, Bank, very strong disbursement growth coming in over there. You had Trent, which is in focus after Motilal Oswal's new note over there, and a couple of other stocks in focus as well. There you have it. First tick on the index, the Nifty holding firm above the 21,000 mark. The mid-cap index is having a better showing, actually 175 points in the green right now. Advanced decline ratio very strong at almost 2,000 stocks on the advancing side. Let's take it straight to the winners. You have Maruti Suzuki, which is topping the charts, 0.5% higher. HDFC Life, Hindalco, Adani Enterprises, and M&M are a couple of other stocks that are trending in the green right now. Let's also take a look at some of these FMCG names. ITC is looking pretty good, 0.5% higher on ITC. And what's leading from the front on the downside? BPCL, ONGC, Infosys, L&T, Bharti Airtel, and Titan. These are a couple of names that are in the red as we speak. So don't lose sight of that. But the fall in Infosys is not too much, honestly. Yes. It's about a 1% cut. And we were talking about that as to how it could be used as a buying opportunity by long-term investors, considering IT is back on the buyer's radar. So now it's cutting its losses, less than a 1% cut. Would be interesting to see how that plays out. But all the action definitely is in the mid-cap space. Huge moves coming into names like IRDEA once again. So that's where the focus area is.
Well, that's right. So just one point on BPCL. It's actually gone ex-dividend. So 21 rupees is the dividend paid out there. Ex of that, actually, the stock is more or less flattish. So that's about one of those frontline names in there. Stocks that are in focus and stocks that are running away. IRDEA, as Sonia mentioned, the top traded stock, that's flying away as we speak. Sterling and Wilson, well, the news break was confirmed that we had put out earlier. They've launched a QIP to raise closer on 1,500 crores. Demand appears to be pretty good. That stock, in fact, is up closer around 5%, locked in upper circuit. J&K Bank, the QIP was launched for 750 crores. Extremely strong response is what we've got. So that one, in fact, is up closer on 5%. Spandana Spurti, they had a meet yesterday, and they're expecting weekly disbursements to increase to 75 to 80% from around 7% by FY28. So that stock as well is doing well. BLS International, they bagged a new contract in Canada. So that one as well is up closer on 4%. Mankind Pharma, sources were indicating there's likely to be a seller today. Yes, the selling has come about because the block has happened on the screen. So that stock's down closer on 4.5%. But now we'll have to see how the global indices rejig. There could be some inflows owing to higher free float. So that's going to be an important one as well. For the time being, the stock down closer around 4.5%. Prashant.
Well, it's a flattish kind of start. So 18 points on the Nifty is what we have. And I think you've got the Nifty Bank, which isn't really doing very much. It's dithering about 0.25% higher, but nothing to complain. Momentum, of course, naturally does slow down a little bit, even as the market inches higher, continues to inch higher. We were talking about IRDEA with Abnish earlier. It's just is doubled basically from 50 rupees last month. It's now $100. As I said, at about almost 3 times F525 price to book on IRDEA. That's a renewable story people want a piece of. IRFC is another one, which is up about 3% from the PSU space, but different segment, of course. RVNL is up about 2%. So these railway stocks, they did well in trade yesterday, and I think that continues today. Dixon, by the way, has taken out the previous highs after almost a gap of 2 years or so. And it took it out, I think, day before yesterday with the recent move. It's traded above it. I mean, it's been a fantastic week so far for Dixon, and that's another 5% or so. As we said, we have the management joining us in a bit from now. Sterling and Wilson Solar, that has had a one-way move from 250 kind of levels. Stocks at about 450 on Sterling and Wilson. So there again, the QIP, but I mean, strong demand, etc. J&K Bank, we've already mentioned. BLS, which is the visa processing company, that is about 5% higher, 310. Gandhar Oil had a decent listing. It was up 5% yesterday. It's following up with another 4% this morning. And I think we mentioned Fed FINA, Spandana we mentioned. Inox Green is coming up with about a 5.5% pop. And you've got something like a GIC RE, which is coming up with about a 4% gain as well. So it's not a bad-looking screen at all. On the downside, I think bulk of it we've already mentioned. Tube Investments, perhaps keep an eye, 3% lower. It's got volumes 37.72, and I think yesterday as well the stock was slightly under pressure. Dheeraj Agarwal is with us, Managing Director at Ambit Investment Managers. Dheeraj, good morning. Good to have you with us here. Thanks very much for your time as always. What after this spectacular move, Dheeraj, what are you telling clients one should do? Stay the course? I mean, one thing we've heard is many foreigners who perhaps were to come back next year, perhaps, prepone allocations with what has happened last week with election results, etc. Your thoughts?
Yeah, so I think at this point of time, looks like there could be some more upside because, one point to observe here is that almost every single risk that the market was focused on is pushed back to at least April or May. So, the general expectation is that the US will cut rates somewhere between March and May, so that risk is pushed out by 3-4 months. With the fantastic state election results for the current ruling central government, the entire political risk is pushed out to at least May of next year when the general elections happen. So barring corporate result season, which will start second week of January, there are no significant risks at this point. And partly because of the cool-off in the US bond yields, you've seen OFIs come back to the market also.
All right, it's actually a very good screen. I mean, the Nifty Bank is up almost about 80 odd points right now. And we're building onto our gains, so lots to talk about in terms of individual names. Just want to get to some double-digit gainers as well. J&K Bank is now inching towards almost a 7% rally. Dixon Tech, of course, has been in focus, as we told you. And a couple of other names. Aster DM is up almost about 2 odd percent. And IRDEA, of course, 3% higher. Dheeraj, thanks for joining in. Wanted your thoughts on how to approach IT now. We're seeing a spate of C-suite resignations, actually. We saw it with Wipro, now with Infosys. But a lot of people believe that this is par for the course, especially in a high-growth sector like IT. Your thoughts? Would you stay invested in such names despite these resignations?
These resignations by itself should not change much in this sector. I think the bigger call in the IT sector at this point of time is how much US slows down next year. The jury is still out, whether it's soft landing, hard landing, or no slowdown at all. In fact, interestingly, one current view in the market is at loggerheads with each other because one expectation is that US will cut rates by more than 200 basis points next year, which is predicated on the fact that the US economy should slow down meaningfully. And if the US economy does not slow down meaningfully, I think the rate cuts will disappoint. So IT view is linked directly to how much slowdown we see in the US next year. FY24 is in the bag. There is some amount of mixed views about FY25 still in the market. We will have to just wait and see how the US economy does in the next 2 quarters.
Hi, Dheeraj. Good to see you. And as always, I think you have a long short fund, right? How are you positioned out there?
So we were very long till a few days ago. We are slightly long at this point of time, but still long biased. We reduced a little bit of our longs in the last few days, given the very strong rally. Not to say that the fund is changing the stance from bullish at this point. I see some more upside, as I mentioned at the start of this call.
Okay. All right. So, trimming a little bit of the long position, but still more long than short, in terms of that fund. Dheeraj, we have been talking about this. There's some of those big private sector banks out there. They are there. They're looking very juicy if you want to add to your portfolio as a portfolio stock. The names I'm talking about is Kotak Mahindra Bank and HDFC Bank, who have been relative underperformers. But those portfolio stocks, they're taking time to actually, perform in line with the market. Do you think 2024 is going to be a year where we see some of these heavyweights come to the party and, in fact, outpace the returns that you're seeing on the headline index? Because for the time being, the smaller banks, the banks in the broader markets have done much, much better.
I think that's a very highly likely scenario for 24. There's a lot of mean reversion and valuation correction in the mid-second liners, etc., which has already taken place. Compare that to a lot of frontliners, not just in banking, but across many sectors. The stocks have consolidated for between 2 years, 1.5 years to 3 years, whereas the earnings have actually kept growing at the normal trend line pace, which basically means that valuations of a number of these names are down 30 to 50%, depending on which name we are talking about. and at this point of time looking very attractive. So I would certainly agree with this statement that in 24 there could be a shift in terms of relative outperformance of the frontliners and large caps, including banks.
Okay, that's on banks, and we also talked about IT. So many other spaces, right, that are picking up. So I wanted to talk about them one by one. This whole renewable energy space has now suddenly become the hot topic. So all of these stocks, Inox Wind, Tata Power, the Adani Group stocks as well, IRDEA and green financing. But the run-up has been really sharp. Is there still more to go? Do you think this is a structural growth story, and would you put money to work here?
Structural growth story, yes. Whether I'll put my money to work here at the current valuations is a bit doubtful. So we saw that, and we have discussed on this channel a number of times, names like Zomato and Policy Bazaar in the past. If you recall, in the initial part, the stocks went vertically up, and then most of them actually corrected down 50 to 80%. And after that, they have started moving up again. So this always happens in any new sector. In the initial part of the sector optimism, markets just doesn't know how to value them. And the stocks tend to move and overshoot or discount multiple year of earnings or multiple year of performance in a very, very short time. And then it does a course correction. So I wouldn't chase these names here. As a business, it's a structural story, 100%. Renewables is here to stay and will keep on growing, but not at the current valuations in terms of stock prices, perhaps.
You know, the other thing, Dheeraj, which I think has there's more confidence in this team is Make in India, right? Import substitution, etc. Dixon is the used to be the poster boy. Now, of course, you've got so many others which are listed, and they've all done well. But Dixon is back up, is taken on some important levels. I mean, highs of the last 2 years. There's this tie-up with Lenovo, which has now been announced. By the way, we'll be speaking with the management a little later. But what are your thoughts on Dixon, if you have a view here, or what you like the most in this space?
So again, this space has the same issues. The story is long-term and is structural, but at the same time, difficult to wrap my head around valuations of a number of these names at this point of time. And once again, there could be a case of multiple years of earnings performance getting discounted today. The one pinch of salt I would mention on this entire space story at this point is that at some point of time, India will need to backward integrate into component manufacturing. At this point of time, margins in most of the EMS companies is broadly similar to the PLI benefits, which basically means that ex of PLI benefits, now the companies would still struggle to make profits. But it's the beginning of the story. Auto story started in a similar way. If you recall, when Maruti came to India, it was 90% Japanese components, and now it's 90% Indian components. So these things take time. It will play out. And again, they are in the momentum phase right now. I would just say that if one wants to chase momentum, fair enough. But if one wants to try to justify the valuations, it's a little tough.
Dheeraj, in the past, you've spoken about Zomato. You're a fan of it?
At this point, I'm not too sure, but yeah, as a theme.
I mean, earlier, I think, Dheeraj, earlier on you were quite constructive on the stock. So you're saying it's run up a little ahead of itself?
Yeah, it's almost doubled in a very short span of time, right? So I think the business will continue to do very well in terms of timing. Entry and exit in the stock is a little bit of a fine-tuning matter.
All right. I wanted your thoughts also on the housing finance space, because we, of course, going to talk about it now. But this is a space which is picking up a lot, right? Something like a PNB Housing Finance looking at AUM growth of around 17-18%. From an investor standpoint, does it make sense for you?
In fact, this is one segment of credit which has continuously grown at a very steady pace. So, if you look at the component of credit growth in the last year and a half, it's largely housing finance, consumer finance, and secured consumer lending. And corporate lending is just about started to pick up in the last few months. The corporate lending has been slightly weak as compared to the other two segments in the past. So we are seeing buoyancy in the real estate sector and housing finance. That also, I think, is here to continue. Across real estate names, the projects are getting lapped up as soon as they are launched, especially in the premium segment. So this will continue to remain a high growth sector.
Dheeraj, your team at Ambit has initiated coverage on these capital market plays today, I think. There is CAMS and KFin. Just want to run us through, the ideas here?
I've actually moved on to the buy side with an ambit, so I'm not that plugged in. I'll have to call the analyst and take the
So you'll have to
presentation.
call the analyst to add. Point taken. Thanks very much. Thank you very much, Dheeraj. We'll actually invite the analyst who's written those notes and kind of understand. But that's another space, right? I mean, capital market intermediaries which have done phenomenally well. And again, a runway for growth seems to be pretty long out there. So that's Dheeraj with his perspective. The market, by the way, is up about 40 points. So it's good going, 21,030 or so. Sonia.
Okay, well, we were just talking to Dheeraj about one space, which is the housing finance space, which has been doing really well. So let's look at that. PNB Housing Finance is on our radar. The company in their conference call recently said that they maintain their FY24 guidance for spreads and the net interest margin, while for credit costs, they are guiding for 0.6% for FY24 and 0.4% from the next fiscal onwards. Girish Kosgi, the MD and CEO of PNB Housing Finance, joins us right here in the studio to discuss more on their business momentum. Mr. Kosgi, good morning, and thank you for being here, taking the time out and visiting our studios. Appreciate it. I want to understand, because the space is growing really fast, right? The affordable housing segment. And we were just talking to Kolte Patil. They were saying that demand across the board, across geographies, is looking very good. Are you confident of maintaining the growth? I mean, earlier you had said that AUM growth will be about 17-18% year on year. For FY24, are you confident of doing that? And what are the early signs for FY25? What kind of reasonable growth would you be looking at?
Yeah, good morning. Thanks for having me here. So if you look at PNB Housing a year back, we used to show growth of, it was either flattish or it was negative. So from that stage, we have moved to a book growth on retail of about 12.5% in first half on a YOY. Now, I had guided a growth of about around 17%, right? I think we should see it more directionally. PNB as a company, we are in a transformational journey, right? And we all know what has happened in last 1 year, right? So there are three reasons why I feel that this industry will grow. Whether PNB will do 17, 17.5, 16.5 or 16, I think it's not a real matter of, I think it's not a real big concern, but as directionally, this industry is doing well.
Yeah.
Industry is doing well. There are three reasons. One, there is huge demand on the prime side, on affordable side. Number two, there is huge shortage in the housing units. Number three, there is huge support and push from government. And that's going to be a X factor in next 2-3 years time. So all these three things put together, this industry has to grow.
Can you elaborate a little bit on what is the push from the government that you're getting at this point in time? And when you talk about the trend will continue, are you looking at a 20% plus growth for the industry over the next couple of years? What do you think the sustainable growth could be?
No, I think what was anticipated, let's say till about a quarter back was, industry will grow at about 12 to 13%. And government push on housing probably might take it up by another 1% or 2%, I think, but that is on the entire industry, right? The push is going to be so high that this industry has to grow. We always talk about 12 to 13%. We used to talk about 14% earlier. Now it is 12 to 13%. But PNB Housing, this year, coming year, we will definitely grow at about 40 to 50% from the industry growth rate.
Okay. All right. Hi, good to see you, Mr. Kosgi, and thanks so much for coming down. Affordable housing, I think you had mentioned this point that you'll be one of the first housing finance companies that hit that 1,000 crores odd in terms of exposure out there. Have you all hit that, or when do you all hit that mark, and how do you see this segment ramp up?
Oh, I think great. In last 11 months, we have built a book of 1,000 crores.
1,000. Affordable housing.
Affordable housing. We started this about a year back. We opened 100 branches.
Okay.
In 11 months, we have built a book of 1,000 crores.
Okay.
And obviously, the portfolio is very new. I think 1 plus DPD is 0, right? I think it's a very good book. Now, having said that, there's huge scope, there's huge opportunity in this space. So we will be pretty aggressive in this space.
Okay. So aggressive would be what? Could you put some numbers to it? Where do you see this going? And in under a year, you've already hit 1,000 crores. How does the next 12, 18 months look?
See, affordable business, it's all about three things again. One, we need to open brick and mortar branches because not much of digital would work.
Got it.
Automation would work internally to try and streamline the process. From customer point of view, I think it is more of physical branches being present. And that is why we had opened 100 branches in last 1 year. We will open 60 more branches before March.
Okay,
Right?
got it.
So one is we need to have physical branches. Number two, obviously we need to invest in people.
Right.
And number three, in this business, I think we need to manage the operational risk. I think that is the most critical part in affordable. As far as demand is concerned, demand is pretty good. It is, in fact, a notch better than prime.
Okay.
You know, Mr. Kosky, good morning, and thanks for coming in. Always great to chat face to face. You know, over the last 1 year or so, and we've done stories on this, etc., premium sales have been doing very well on housing, right? Affordable, even if you take the number of units which are sold or the value of sales, etc. I mean, I'm not talking about PNB Housing, but industry. It's been, premium has far outpaced the growth there. But many do point out that is simply because the inventory of affordable housing out there is not that large. I mean, people don't seem to be building that much. Builders are not really interested in building affordable housing. Everybody wants to do premium because you got to sell, you can sell 100 premium units and you make a lot of money, whereas you got to build 1,000 to make the same amount of money. So it's tougher in that sense as well. I just want to get your thoughts on that. Do you have to push builders to come up with projects and say, well, you know, we're ready to fund you, but you got to go into the affordable segment and do it?
I think this first sale from builders, that is a very small part in affordable. To a large extent, it is construction, self-construction, plot purchase and construction. These two would account to 40%. Resale would account to another 25%. Right? So when you move to prime, especially in, let's say, top 25 cities, I think bulk of the business would come in from developers, from apartments. Whereas on the affordable side, about 20-22% is from flats, and the rest is going to be independent houses, or it's going to be self-construction or plot purchase and construction.
But so you're making my point in a way, Mr. Kosky, right? So flat apartments and builders making high rises, etc. And the affordable segment is about 20%. You said, right? First time.
I'm saying the composition of the book, if you see, it's about 22%.
Doesn't that need to grow? I mean, the real big scale and growth will come when that expands, right?
It has to grow, and it will grow. It takes time. And if you look at the tickets, it's obviously affordable. See, because, it also depends. See, affordable business was there 5 decades back, 4 decades back, 3 decades back. It's only since last 10 to 12 years, we have categorized to 2 segments, prime and affordable. Even 3 decades back, you had those affordable profiles who were being given loan of 10 lakhs, 15 lakhs, 20 lakhs. Maybe the pricing was same. Today, we differentiate the segment, we differentiate the market, we differentiate the pricing, and therefore the yields are different, profitability is different.
I want to talk about the corporate portfolio. You said you'll be back in that segment. What are you looking at in terms of a timeline? When do you hope to get back to corporate portfolio?
See, we had taken a call to run down the book and also work on NPA.
Yes.
Both we have done. Now the book is less than 2,400 crores as of last quarter end.
Okay.
And very soon we'll be restarting corporate, but that will be in a very small way.
Okay.
We will be focused on select developers, select projects in select cities.
Okay.
And small ticket size. So it's not going to be a big story for us.
Okay.
Corporate restart is going to be only to propel retail business. To that extent, we are committed. And at any given point in time, at its peak, corporate at a portfolio level is going to be less than 10%.
Less than 10%. Okay,
Yeah.
got it. So retail loan growth is your main focus area. What is the sustainable retail loan growth? You spoke about overall AUM growth of 17 to 18% for FY24. But in retail loan growth, what are you looking at?
I talked about retail only.
Yeah.
Okay.
So I think for next 2 to 3 years' time, 17 to 18%
Okay,
is a good growth rate.
All right, Mr. Kosky, I want to understand the cost of funds. If you could tell us how have they changed, and also what is your mix currently? How much of it is from banks? I asked this because the RBI had come out with an announcement, a couple of weeks or so ago. So does that increase your cost of funds? If yes, by how much?
Okay. Obviously the rates start moving up till about 2 quarters back. Now it is more of a consolidation stage. And we are expecting rates to go down maybe after a few months. Maybe it will start with 25 bips and slowly it will catch up. Now our cost of funds also had increased and now it started dropping.
Okay.
So on portfolio, our cost of funds is 8%. Incremental is about 7.9%. And looking at the performance, we are also expecting an upgrade from rating agency that could further bring down the cost. And till last year, we were not eligible for funding from NHB.
Yes.
This year, we are eligible, which means the cost is going to further come down. So I think going forward, there will be improvement in cost. And if you look at the entire liability mix, 40% is from banks, 31% is from deposits, 10% is we have NCDs, ECB is about 10%, and the rest is from CP and others.
So from NHB, you'll be, you're eligible to borrow. So obviously that will come at a lower cost. Can you tell us how much lower can that be in comparison? Currently, you're borrowing at around 7.9 to around 8%. So how much lower will that be? Point number one. And what does this mean in terms of NIMs going ahead, the margins going ahead?
So NHB blended both refinance and affordable, both put together. I think it should be, the difference should be a little over 121-25 bips from the from the normal instruments, cost of funding perspective. In terms of NIM and spread, I think we've always maintained that our NIM, for example, last quarter was 3.95 and spread was 2.6. I think we'll be able to maintain around that level. NIM will be between 3.5 to, let's say, 3.9, 3.95. And spread will be around 2.5, 2.6.
I just have one question on asset quality. Do you see further improvement in asset quality by the end of FY24?
Oh, definitely, yes.
Okay, what would the level look like?
If you look at last March, our overall GNPA was 8.13%. And as of last quarter, which is about 6 quarters, it is 1.78.
Yes.
Right now, in next 2 quarters, it will come down, but it will take some time. So I think another 3 to 4 quarters time, we should be one of the best and comparable with the other companies in the industry.
Mr. Kosky, CRISIL and ICRA had upgraded you, right?
They had changed the outlook.
Correct.
It was not an upgrade. They changed the outlook. The next is an upgrade.
Okay. And this NHB, you already started borrowing? Because last time you were on, you were saying...
we are in the process.
Okay. I mean, it's in the works. And you said the difference in cost of money from there is about 100, 125 basis
Generally, it's about 100 to 120 basis.
Okay.
All right, Mr. Kosky, appreciate your time here. And thank you so much. We got a lot, not just about the industry, about your own company and the way forward as well. Looking forward to chat with you again sometime soon.
Thank you.
All right, that is the Managing Director and CEO of PNB Housing with more on the business momentum and the way forward. They're looking at a 17 to 18% growth in the business. That's something that they had guided for earlier as well. And they are very aggressive in this space, but they're looking at more brick and mortar branches. They're looking to open 60 more branches before the month of March. Let's slip into a quick break. As 2023 is about to end, we'll be focusing on stocks that have been the big winners of the year. Today, we'll speak with the management of NCC, Neeraj Sharma. The head strategy NCC will be with us on the other side. Stay tuned. Later in our special segment, Charting Trends, Mitesh Thakkar will join in to decode the charts and the technical trends of the market.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, markets are pretty steady and the broader markets are outperforming yet again today. So it's time for our special offering, Big Winners of 2023, where we're focusing on stocks which have shown a stellar up move in this year. And investors obviously are very, very happy. But they would like to understand what's the outlook from here on. NCC is one such stock. It's up close to around 90% in 2023. The company has received a couple of orders worth 550 crores in November itself. We have with us Mr. Sharma, the head strategy NCC, who joins us on the show. Hi, Mr. Sharma. Morning, and thanks so much for joining in. First of all, your investors will be very, very happy because 2023 has been good in terms of a stock price movement. Let's understand a couple of fundamental aspects, though. You know, the order inflow from the road sector has been a little bit slower, but yet your overall order inflow has been good. So give us a couple of details. What is the updated number in terms of order inflow that we have seen? And also, as a percentage of your order book, could you tell us which are those orders which will be executed in the near term, that's under 3 years, and which are the orders that will be executed post those 3 years? Please go ahead, sir.
Yeah, very good morning. Firstly, I appreciate your commentary. And it is a matter of fact that, we are sitting at the highest ever order book in the history of the company, which is 62,349 crore. And as we speak, this is one of the best book to bill ratios that we have reported in the recent several quarters. So we are pretty confident, at the order book. We are pretty confident about our ability to execute these orders. We have, 7 verticals in our company, and the execution time of a project really depends on the kind of contract that we have signed with the clients. There are contracts which are required to be executed in about 18 months' time, and there are contracts which are also required to be executed in about, 5 years, 6 years' time. So by and large, if you insist, if you want to put a number, we are quite confident of turning over this order book in about, 3 to 3.5 years. And we are pretty confident to achieve the 3 margin guidance that we have shared with the street. The first one, that was, order inflow of 26,000 crore as we speak. If you really take into account the announcements that we have made in last couple of months, we have already reported an inflow of about close to 21,000 crore, which is about 80% of the guidance that we have shared with the street. Yes. The second guidance that we have shared with the street is about 20% revenue growth. We have already reported a 35% revenue growth in the first 6 months of this fiscal. And we are quite hopeful of, achieving this number as well, that is 20% revenue growth. The third number that we have shared with the street is about EBITDA margin upwards of 10%. So we are quite hopeful of hitting that number as well. So we are pretty confident. Everything appears to be in place, and our execution is, going full steam. And we hope to hit all these numbers by end of this fiscal.
Okay, all right. So you're pretty much on track, Mr. Sharma, but I think the street is sensing that maybe you could outbeat these numbers as well. We'll have to see for FY24. My question to you is, you'll end this year close to around 18,000 crores of revenues with margins of around 10%. I think PAT margins will be around 4%. By when can you get to, say, 25,000 crores of revenues in a fiscal year? And also margin improvement from here on, what can it be? 10% is what you've already guided for. You're going to achieve that for sure for this year. What are the levers you have to, see this move a little bit higher from here on?
This fiscal or next year? About the next year, we have not really, in a project business, the way we talk about the future is, once we close the financial year, we try to review all the projects. We are not really talking about a couple of projects, 10, 15, 20, 30, we are talking about close to 150 to 200 odd projects. So, by end of the fiscal year, we try to evaluate, status of each of the projects, and then try to work out a number that in the next 12 months, out of these, about 150 odd active projects, how much is the contribution that is possible from each of the projects? Then we talk about the number. So give us some time, maybe in April or May, I would be happy to come to your show and talk about what is the margin that we have in mind for the next fiscal.
Okay. Mr. Sharma, hi, good morning. Prashant here. So just 2 questions. One is, you said 35% growth in H1. So to meet 20%, you just need to grow 5-6% and you're there. So why not bump up the 20% number?
It is our considered, belief that one should not keep changing, the numbers quarter to quarter. The last year also we have reported a 35% growth. So better to, I think, it generates good visibility, good amount of, confidence, trust to all the market participants when we talk about a number and hit that number, hopefully. This sends really a a wrong signal to the market that every quarter you're trying to revisit. This is not how we really work. We believe in talking about a target, and possibly surpassing that number, hopefully.
Okay, no, that's point taken. Although it'll give the wrong signal if you downgrade expectations, which is not the case. I mean, what I'm asking for you is to, as you've done, beat and raise, as they say, right? But anyway, point taken. You want to stick to what you've said. You'll, I mean, when the numbers come out, of course, it'll be better than what you've guided for. Just a quick question: has there been a loss in pace of order awards on the roadside, Mrs. Sharma, over the last 2 or 3 months? So, and is not just for you, but across the board, that's what, data from the Ministry of Roads and Highways, etc., indicates. So the focus perhaps is on existing order execution, new order awards. That pace has come off quite sharply. Go on, sir.
That's right. You're absolutely right. But fortunately or unfortunately, we have not been able to bag a lot of projects, from this vertical, that is roads. There has been a lot of new players who have really jumped in the fray, and it is to their credit that they have been able to corner sizable portion of the new awards. So though we continue to bid for the projects in this space, but we have not really been very successful in getting a lot of projects from this space.
Okay. Mr. Sharma, good morning. I have a couple of questions actually. I want to start first with the water portfolio, because CLSA has put out a note saying that your water portfolio is in a prime position to get a lot of central government orders, especially because of the Jal Jeevan mission. Can you talk about what the opportunity here is, and over the next 1 to 2 years, how could you benefit from it?
Absolutely, absolutely. See, this scheme was really launched. Give me a couple of bear with me for a couple of minutes to give you a sense of this scheme. This scheme was really announced in the 2019. The name of the scheme is Har Ghar Jal. So it's a Jal Jeevan mission. What the scheme intends to do is to provide the potable water connection to all the households. When the scheme was launched in 2019, we had about 20 crore households in the country. Really, it was 19.53 crore households. Only 5 or 6 crore had the potable water connection. So the scheme intends to provide the household potable water connection to all the households. And this scheme is jointly funded by the central government as well as the state government. The outlay of this whole scheme is 3,60,000 crore. So it's a very, very handsome allocation of the resources by both the governments. And fortunately, we have been able to bag a lot of projects from this, this scheme. And we are already sitting at a very comfortable, order book from this scheme. And we continue to see award of a lot of new projects. Those schemes. Yeah, sure.
Can you give us the numbers, Mr. Sharma? What is the order book from this scheme currently? And as a percentage of your total order book, what is it now? How much can you grow it to?
It would be about 17 to 18% of our total order book.
Okay, and what is the value, the absolute value?
Absolute value would be about, about close to 19-20,000 crore.
20,000 crores just from this particular Jal Jeevan mission, is it?
All the schemes. In the Jal Jeevan mission, there are other bulk water supply schemes as well. You have to have the bulk water supply as well to supply household, potable water.
So this 20,000 crores is executable over what time period?
It depends, in the different schemes, the timelines are different. So it would be about, about 18 months to 2 years. There are projects which are required to be executed in 3 years as well.
And have you added this in your 20% growth guidance for the full year? I mean, is the
absolutely.
I just want to confirm that number, sir. Your total order book currently is on 63,000 crores. Out of that, you're saying around 20,000 crores is towards this water projects. Is that correct?
Our total order book is 62,349 crore to be put.
Right. And how much is towards water?
Yeah, 19,000. Not only this scheme, as I shared with you,
all water projects.
In the water space, this is one scheme that intends to provide the potable water connection to the households. But you have to have the bulk water, supply available to supply these households. You have to have, the waste treatment plants. You have to have the STP. So I'm talking about the combined amount.
Got it. All right. What's the update on Septop case? The arbitration award came in favor of you in the past quarter. I think they had said around 280, 300 crores, but the initial receivable, I think, was around 600 crores. So what is the reason on that? What is the latest on that front?
We have received the award about 198 crore, which is due to us. But as I shared with you in the last conversation that we had, there is a window available to each party to file an appeal of 3 months' time.
Yes.
So we have still some time at our disposal. So we'll cross the bridge when we get to it.
Okay, but you'll have been decided as a bit.
No. We have consulted, few legal firms. So once some informed opinion is available to us, then we'll take a final call. What is it that we intend to do?
Okay.
Give us some
You
time.
spoke?
Maybe.
Sure.
Yeah, sure. Maybe next about a month's time, we should be able to take a firm call. Then I would be happy to come and talk about this.
Got it. We'll be happy to host you again to get more clarity on that. You spoke about the Jal Jeevan mission and the huge opportunity. You said 20,000 crores is what you're looking at there. Can you give us some of the other segments that you're present in? Smart metering, for example. What is your role at the moment? What's the opportunity there? And how is the ground execution looking?
We have just bagged this order, about 3-4 months back. So for I'm trying to answer this question about the smart meters.
Sure.
We have bagged 3 projects from the smart meter. About a couple of months back. 2 projects are from the state of Maharashtra. The value of the order would be about 5,755 crore. 1 project is from the state of Bihar, that is 2,324 crore. So if you take into account the total order value from these projects, would be about 8,000 odd crore, 8,080 crore. But what we have done is we have only taken the EPC portion of the order book in our books as we speak. And we have to execute these 3 projects in about a decade's time. So we have time. In the first 20 months' time, we have to really procure and install all these meters, commission all these meters. Then the annuity payment from the client would start. Your second question was about the verticals that we have. So other than these 2 verticals, we have other 2 verticals, what we call buildings division. In buildings division, we construct all kinds of buildings, all kinds of stadia, sports complexes. We have one more big division we call transportation division, in which we do all the metro projects, all the elevated corridors, highways, these kind of projects. Then we have mining, irrigation, electrical T&D I have already touched upon. So these are the 7 big divisions that we have in our company. And as we speak, we have a very diversified portfolio of projects. Okay. So we have almost, equal kind of exposure almost everywhere.
Okay. All right, Mr. Sharma. Well, we appreciate you joining in, giving us all of those details, taking us through your targets for this year and even post that. Thanks so much for joining in, Mr. Sharma, and wishing you a Happy New Year in case we don't speak before then. And we look forward to having a chat with you when exactly you can revise those guidance numbers or give us a further outlook for FY25. Well, for the time being, let's turn our attention to a special segment, Charting Trends. Mitesh Thakur joins us to decode some of the charts as well as technical trends in the markets for us. Hi, Mitesh. Welcome back. Tell us, what is the top call that you have in terms of some of these charts?
Morning, Anil. So these are basically, some medium to long-term ideas which I've identified recently. The bottom market has done very well, and the first idea on my list is Century Ply. Comes with a disclaimer that it's a part of my portfolio. It's kind of broken out of 18-month consolidation. So, that suggests that on the longer-term time frame, the stock is likely to make higher highs. You have good support from the momentum indicators. I would now look at targets of around 950 to 1,000 as a minimum, which offers about 30-35% kind of upside. And this is a good accumulated strategy in the last few days. So you would want to accumulate it slowly. Buy part now, and if you get any dips to about levels of 720, 725, add more, and keep a stop below 670 here. And I think the stock has a high chance of heading towards 950 to about 1,000, and then we'll take from there.
Okay, what else are you looking at apart from Century Ply? What are the stocks on your list?
Morning, Sonia. The next stock is again a part of my portfolio, which is IRCTC. See, this stock had a very good run till 2021 and a part of 2022, and then went into a deep correction. I think now there are signs that correction is over, and the stock can possibly head towards the highest monthly closing, which the stock did was about 833. So it should retest it, but then that doesn't give you a big target. The position of the indicator suggests that we should break beyond these earlier highs and then make new highs. So I'm looking at an extension target of around 1100. So that gives you roughly about 40% kind of an upside. And this can be bought at current levels. You can add more if you get a decline to about levels of 720, 710. and keep a stop below 660 here. And I'm looking at 1100 as the target for the next 12 to 15 months.
Mitesh, hi, morning. You like Rallis India?
Morning, Prashant. Yes, I think, Rallis India for the last, if you look at last 3-4 months of price data, the monthly highs were between 235 to 40. It was a strong monthly pivot. And this month, I think in December, we have seen the stock get past those levels of 235 to 40, and the indicators are now pointing upwards. So the long-term trend should now be considered on the upside. That gives me a target of around 320 or 330 here, which was the earlier highs in 2021. That should be retested. We'll possibly then look at extensions. But even that, I think, gives you about 30% upsides. And this one can be accumulated with a stop below 235.
Okay, all right. What about Kesam Industries? There was plenty of value out there fundamentally, but now post that deal, how's it looking at the charts?
Very strong. I think one, the entire cement pack, if you look at the charts of ACC, Shree Cement, Ultratech Cement, looks good. And Kesoram, has been in uptrend since July. What has happened for the month of December is that it's given a continuation pattern breakout, which is suggests that the rally which was done before the this gap will be repeated on the upside. So typically that should give you targets in the range of about 210 to about 220, which approximates to about 40% upsides. And this is a buy with a stop below levels of 138.
All right, and finally you have Info Edge, right, that you're looking at?
That's right. The stock made high around 7,300 in October 21, and then declined by about more than 50% to make a low of 3,500 in Feb 23. Now it seems to be getting into an uptrend again. So even if you take a simple 61.8% retracement on the longer term charts, that gives you a target of around 5,800 plus. So I think the stock is a good bet to buy with a stop below 45.
Mitesh, I'm not sure if you put out a call on Dixon. Dixon has taken out the earlier high from 2 years ago. Do you think it's got more here?
It's got a lot more rates in Prashant. That's right. I think, it had a big high in 2021 and 2022, winning around the 5,700, 5,600 mark. Now that that's been taken out, I think I'm looking at a target of around 8,000 plus. So still much more to go. And in case you get a good decline back to about 6,200, 6,300, I would even want to buy the stock.
Just one more name, Gokuldas Exports. Again, it's been a big winner. But from the highs of about 1,020, it's come off very quickly. Last 6-7 days it's been weak, and it's now down at about 890 or so. How would you look at this? Is buying opportunity or a little lower?
Maybe a little lower. I think the stock has done very well. It rallied from 350 to about 1,000 plus levels. Now the first signs of some profit booking correction from overbought levels is likely on the medium to long term chart. I think you will see the stock retest the swing lows of 780, which it made in November, and around those levels, if we see good consolidation, I would again want to buy it.
Right. Thanks a lot for joining in and have a good day. Well, that is the word on the technicals. By the way, some news on Thermax about an order win. So just keep that on your radar. Let's talk about some more stocks on the move. Abhishek is focusing on J&K Bank, which is buzzing in trade. Remember, he highlighted the stock in top 10 as well. Abhishek, let's revisit this.
J&K Bank has launched a QIP of about 750 crore, and sources tell that there is strong demand over there. Indicative prices at around 107.6 per share, a discount of more than 14% to closing price, and about 4.5% discount to SEBI's floor price as well. The equity dilution is about 6.8% now. This discount can be compared to the fact that yesterday in trade, the stock was up more than 9.5%. So bankers to the issue are SBI Cash, Motilal Oswal, MK, as well as Elara Capital. If you take into account the 750 crore of capital infusion, calculation shows that the Tier 1 ratio could improve to 12.66% from 11.73% earlier. The book value can increase by 0.3% to about 103.5 per share. With equity dilution of 6.8%, the net worth will increase by 7%. Back to you.
All right, Abhishek, thanks very much for that. There's J&K Bank stocks up 10% plus. Mankind Pharma is down though. Vivek talked about the stock as part of the top 10 list. Let's revisit this one, Vivek.
Well, they're absolutely right. Morning we had highlighted that there would be a large block deal happening in the stock, and along expected lines, a large block deal, almost 8% of equity has changed hands. We understand from our sources, we had access to the term sheet for this particular block deal. So Chris Capital and Capital Group, both of these firms have actually trimmed their stake quite significantly in Mankind Pharma. The total block size is well over 5,600 crore rupees. And now we understand that the block which has actually happened will increase the free float. So it will be interesting to see how passive indices take note of this particular block deal, and whether there is any increase in weightage or whether there is any incremental addition to any of the passive indices like FTSE as well as MSCI. That will be the key trigger going forward for Mankind Pharma.
All right, thanks a lot for that. That's on Mankind Pharma. Let's take into a quick break. On the other side, Manisha Gupta will put focus on the commodity space. Do stay tuned in.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
All right, shifting focus to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, can't keep your eyes off natural gas prices because it has seen a complete collapse in the last couple of days there. Overnight, yesterday, we saw 10% of a decline coming to the natural gas prices. I mean, this has been a very volatile commodity. You've seen 140 of low and then almost 700 of a high, and we've seen very sharp profit taking come in for this. After 10% of a decline, 1.5% is what we're looking at in sense of opportunity buying because it has been oversold on the charts. This is what natural gas has done in the last 1 month, down by 28%. And when you look at the last 12 months, we are 64% in the negative for the natural gas prices there. It also is trading at a 6-month lows at this point in time, where there are projections of warm weather going forward, not too much of negative temperatures in the first half of December, and that is a projection for the third week of December as well, and that seems to be being, pardon me, on the there. Also, when you look at the US domestic gas production, that has been at record highs. The US inventories, when you look at that, are up by nearly 7.3% on an year-on-year basis and up 6.5% on a 5-year average as well. So we are looking at record high production, record exports, and also inventories, which are at a multi-year highs right now. Also, when you look at the Europe gas prices, well, that was the story last year, but with there as well, we are looking at, when you look at the prices, they're in a contango and rather backwardation, and the January prices are lower than what you are seeing in for the month of April. So that tells you that there is a discount running in prices right now and the demand is not so strong. Also, when we saw the Panama congestion happen, and there were concerns that a lot of gas tankers which are stuck within that could lead to some price hike, but that also seems to be, those orders rather, have been filled by third-party supplies. There's just so much natural gas flush in the international markets right now, and is the reason you have seen that pressure coming in. There also are reports suggesting that this oversupply could actually continue until 2025 and beyond, so there's not much impetus for the prices to grow from here. Also, when you look at the China crude imports for the month of November, they have seen a decline from Saudi Arabia at a near 5-month lows, so markets are looking at the demand continuing from China. What the street will watch out for is the OPEC monthly report that comes on Wednesday. You have US inflation data today, the US Fed tomorrow. So the next 24-48 hours, there is just so much data and reports coming in that will keep the prices quite choppy.
Okay, thanks a lot for that. Let's sip and take a break. On the other side, Saurabh Gupta of Dixon Technologies will join in to talk about a new contract. Its subsidiary Padgett Electronics was awarded by Lenovo to make laptops and notebooks under the PLI 2.0 scheme. Stay tuned for that.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Let's talk about the big story, the big corporate story, which, of course, the news came yesterday evening. Dixon Technologies, the stock had been rallying over the last couple of days, and for good reason. Dixon told the market that they've onboarded Lenovo, the global IT hardware giant, for making IT products under the PLI 2 scheme. What does this mean for the company? What are the future opportunities? Saurabh Gupta is Chief Financial Officer at Dixon. He's joining us right now to take some questions. Saurabh, good morning. Great to have you with us here, and congratulations on this tie-up. So tell us, I mean, what's the size, scope of this partnership? Are we only talking laptops? What is the total addressable market according to you? What is Lenovo's share currently? Just the basics first.
Yeah, if you look at the total Indian market in terms of volumes, the IT hardware is around 20 odd million units. And Lenovo pretty much has a 19% market share, both in laptop, notebooks, as well as tablets. So I think so it's a large opportunity for us, and we think we'll be able to capture a large opportunity of this pie. So I think so for next financial year, we are looking to capture at least 10 to 15% of their volume requirements for the Indian market. And my sense is year on year that numbers will continue to grow.
So just to get those numbers right, I have a figure of about $12 billion, which is the total addressable market for in India, right? You're saying 12 Lenovo has a 20% market share here. Is that correct? So that's about $2.5 billion.
Yeah, so 12 billion is the total market size in terms of value. And only out of that, 25% is already manufactured in India, primarily to meet the government requirements. So almost 9 billion worth of IT hardware products are imported into India. Now with this, we have also some kind of a restriction put in this category. This will really be a big import substitution game. And Lenovo is the second largest player in the Indian market. They have a 19% market share. So we think overall, in the next couple of years, it can become a large opportunity. Next financial year, because it'll also take around 4 to 5 months to set up these facilities for them. And so next financial year, we're hoping that we should be able to capture around 50% of the volumes. So
what does that translate into? Go on.
Yeah, so they sell around 3.8 million units in India, so 20 million market, 19% market share, and 10 to 15% for us for next financial year. In value terms, it can be somewhere around 1,500 to 1,600 crores. And apart from that, we're already manufacturing for Acer. So Acer also has a 10% market share. So for us, I think so these are the two large brands contributing almost 30% market share in Indian market. Yeah.
So sort of in terms of number of units for the coming year, that's FY25, you'll be looking at around 400,000 units.
Yeah, so broadly around laptops and tablets put together, it would be somewhere around 0.5, 0.6 million. And in addition to that, there'll be some volumes for Acer as well, which we're currently manufacturing it.
Okay, 5 lakh to 6 lakh, got it.
Okay, so just take that point forward, 1,500 to 1,600 crores in value terms from Lenovo alone. From Acer, what is the rate in value terms in the first year? And then in FY25, 26, what are you looking at? Both from Lenovo and from Acer?
So Surya, I think so it can be of 1,800 to 2,000 crore opportunity next year. And then potentially 25, 26, it can be a 4,500 crore opportunity and majorly led by Lenovo.
So 4,500 crore opportunity, both Lenovo and Acer put together, but majorly led by Lenovo.
Yeah, that's right.
And okay, got that. 4,500 crores total IT hardware kind of opportunity in FY26 probably, right?
In FY26.
Okay. What is the size of the opportunity? I mean, once you're able to kind of, where will this grow up to? What's the peak opportunity from both these, as you see it, both these tie-ups?
Yeah, so the addressable opportunity is $9 billion, and assuming that $9 billion is at a retail level, so at a manufacturing level, you give some kind of a discount to it. So in next 4 to 5 years, it can be an opportunity worth 9 to 10,000 crores for us. So we really want to capture a large opportunity of this pie. And clearly, if you look at the government policy framework, the government policy decisions are clearly aligned towards making sure that these laptops and tablets are manufactured in India. And over a period of time, India attains a scale and size, generates that operating leverage, and potentially over the next couple of years, hopefully these laptops and tablets can be exported out of India.
Got it. All right. Sort of give us a few more details. First up, what will it be in terms of margins? Mobile phone margins is around 3% roughly as of the past quarter. So how do these margins compare with that? Point number one. And what is the total investment you will be making as well to, the kind of numbers you're throwing up in terms of revenue potential is massive, but there'll be some investment, right? Quantify that.
Yeah, so what we've committed under the application, and recently we got the approval, we've committed an investment of 250 odd crores.
Yes.
And cumulative revenues of almost 48,000 crores over a period of 6 years starting next financial year. So these are the numbers that we're looking at.
And margins? How much better or will they be in line with mobile division?
They should be in line, so broadly 2.8 to 3% kind of margins. But hopefully, as the way the whole PLI scheme is structured, there is a commitment on backward integration. You get more incentive, the more backward integration you do. So my sense is over a period of next couple of years, if we are able to attain that operating leverage, get into some backward integration of say batteries, chargers, cabinets, display, I think so then there is a small potential for the margin expansion. But initially, I think so next couple of years will be broadly in the range of 2.8 to 3%.
Okay, so next couple of years, margins will be in 2.8 to 3%. On the revenue front, you had guided for 48,000 crores of revenue over the next 6 years, but that's really far out. So in the next couple of years, given that you have this huge $9 billion IT hardware addressable opportunity, what from this current, I think FY23, you ended with about 12,000 crores of revenues. Where you end FY24, what are we looking at in terms of FY25 as well?
In terms of IT hardware, or you're talking about the overall?
The overall revenues.
Sonia, I would not like to give any number on any overall revenues, but clearly it will be a large number for us and basically led by mobile, where we have really got a lot of customers in the last 6 months. And my sense is in the next couple of years, IT hardware will become the second largest opportunity for us after mobiles. So clearly we are looking at a large growth and we will be significantly outperforming the industry as well as our competitors the next couple of years. So it will be really a large growth.
Sure. Can you give us a number in terms of the mobile, the smartphone business? You spoke about how you're in discussions with large global brands for the smartphones business, and a deal is expected to close by Q4 of this year. Can you just put a little more color on that? What are we looking at in terms of the sizable opportunity?
So if you look at total Indian market, in terms of smartphones is around 150 odd million, and 70 million is the 2G and the feature phones basically. So combined, put together now, at Dixon, we have created a capacity of almost 85 million. So almost 1/3 of India's market kind of capacities we have created. And within that, I think so 30 million is a smartphone capacity and almost 55 million is a feature phones capacity. And hopefully by next financial year, we should be able to do almost 75 to 80% of our capacity that we have built. So clearly, mobile will be a large opportunity for us. And we have acquired some customers for which ramp up and stabilization is happening right now. And some more customer acquisitions are in the pipeline, which will hopefully happen in Q4, and their execution will start somewhere in Q1 next financial year.
And then you